Hello everyone and welcome to my new YouTube video presentation related to PrimeBit. This is Scramble from Emotional Crypto Trading, and today's topic is going to be related to liquidation, required margin, margin levels, and trading experience on PrimeBit. We're going to have a tutorial regarding all these topics to make sure we have a clear understanding in the way the system works, as well as in the way you should test it out before you do it with real money. Right, so create your account. If you don't have one, make sure to use the link located in the description area. There's possibilities to get bonuses, there's possibilities to get discounts on your deposits and all this stuff on your fees. There's a ton of the things to check out and make sure you apply for the offer. Great, so on top of that, once you sign up and you have logged into your account, on the top right corner, you have 4 types of accounts. We have 2 live accounts that you have to deposit on when you want to get started with real funds. But you also have 2 demo accounts. Bitcoin demo giving you 1 Bitcoins, and then the Tether demo giving you $10,000 in Tether. This way, you just simply select that account and you have the same features, the same services like on the real platform. That is awesome, guys. There's nothing different than that. It's pretty much the same features. You can look around and get yourself used to the platform and to the abilities to work with the services before you dive into the real funds. Right, so PrimeBit is definitely having a interesting layout with tons of informations back and forth, from the last trades to the contract details, candlestick representation with the charts offered by TradingView, depth of the market, order books, new order, account details, and then here tools for technical analysis. But also right here on the bottom left corner, you've got open trades, pending orders, so many tabs that you can look after and discover a couple of things. Now I'm gonna go into the Tether account where we have order value. We don't look at that. What we have to look at in order to find out more is at the account details. Here we have available balance $9,500. This is what we can trade with, and that's what we have to consider. On top of that, you need to select your leverage before entering the trade, specifically for the account you're about to trade. Every single account, like for example all these 4, have their own leverage introduced. Now below the account details, in the submenu at the bottom over here, you have leverage. Click on this little pen and then select the leverage from the left side based on the max position size you want to trade on Bitcoin, Ethereum, and Litecoin. Make sure you select the right leverage you want to go with. We've put in 2x right now for this demo, and that is going to be pretty fine. So here we go, guys. We have 2 possibilities, obviously, to go long on the market, which means buy, to sell the market, which means shorting. We're gonna go buy. We have here 3 possibilities: market order, limit order, and stop order. We're gonna take a market order, which means that we don't need to specify the price we want to execute by ourselves. The market is gonna pick up the best price for the type of order we want to do from the order book, right? So if we want to go long, it's gonna give us volume from the best price of someone selling. So that's from where it picks up. Now here's the trick, guys. You've got quantity, and this is something you need to understand with the leverage trading on PrimeBit. You've got this quantity where you actually put your order value, but the required margin to get that order value is divided to your leverage. For example, we put 1 Bitcoins order value, which is $9,364. Required margin to open such a size of a trade is 4,685. Why? Because we have leverage 2x, so our margin is multiplied with 2x and it brings up the order value. If we select and go with 10x margin, then our order value is pretty much divided to 10, and that is the final cost of our margin to open up the trade that we need to have in our balance. Very simple, guys. You always put here at the quantity the final size of your trade, but that is not the cost of your trade. The cost is the required margin, which we just spoke about how it is calculated, because it's always based on the number of leverage you are selecting to work with. Great, so we're going to do this. We're going to stay on 2x leverage. We're going to open up one Bitcoin trade. It's going to be 9,372. We'll have to support 4,686 out of that. The other part is received from the margin trading we're doing. We click buy because we want to go long. So we open up the trade, guys. Now, this is where we are. We have the open trades, which are actually active trades. Whatever is at pending is basically the ones that have not been completed, especially when you go limit order and they're not completed. All of them will appear in the pending orders. They're not going to appear under the open. What does it mean here? Open means that active has been completed by the order book or has been executed by the platform, and they're awaiting to be basically either closed by you or just simply left like that, making you money forever if you think the price is going in the direction you have predicted. So just a couple of details. You have quantity 1 Bitcoin. The value of our trade is 9,371. Entry price, fair price. This is a concept you have to understand related to PrimeBit, because it has the entry price and the fair price. And then obviously the estimated liquidation price, which is something we have to talk about as well. So the concept of fair price is a specific price calculated by PrimeBit platform in order to avoid price manipulation while we have either spikes, very long parabolic aggressive movements that are done basically in a few seconds. The fair price remains a little delayed to the actual explosions of the market. So trying to find the prices that are actually at the middle somewhere, it does not really follow the dollar price 1-to-1, the entry price, the real price 1-to-1, the live price 1-to-1. It stays a little delayed behind it because this way it avoids manipulation of the market. So that's fine, guys. You know why? Because you can avoid liquidations, you can avoid any single dangerous movements until the market realistically has that price. Because we all know that during aggressive movements, either direction, the market is going wild. And you can get protected by these wild movements due to the fact that we have a fair price discussion. And that is kind of delayed on this wild movements, but it's only delayed to these wild movements. While when we talk about general movements that are not wild at all and they have a natural character, the fair price is trying to follow the price of the market. Just take a look at right now. We don't have anything wild going on. We don't have a candlestick that is 20% long. So you look at a fair price, 9,363, and look at a live one, it's like $3 or $4 away. Pretty nice. Now, if the live price is going to 9,800 in the next seconds, the fair price is not going to go 9,800 in the next seconds. The fair price is going to go very slowly to that price. It might take it a minute. So during that minute, you can exit out of the trade if you might get liquidated or you might be at a loss. And the price that is going to be considered for you is going to be the fair price always for the trades that you're doing. So the calculation is always based on the fair price, guys. It's always based on that. Especially the profit and loss. It also says to fair price. Always to that it is basically referred to. So that's, like a security measure some of the exchanges are doing. They're trying to delay the prices of the markets when there is, huge aggressive movements in order to avoid manipulations and scams and all that stuff. This way you cannot benefit or you cannot lose because of those. Now, this does not mean if the market is going 20% that fair price is going to still remain, 20% lower and not increasing. It's just going to do it, but in a delayed way of a minute. estimated liquidation price. Now, if the price of the contract is touching this estimated liquidation price, it's going to be written here for your trade, your contract is going to be taken away from you, which means that you're going to lose your entire required margin you have put into. You're not going to lose your order value, you're going to lose your required margin. Take a look at that, guys. That is explained right here on the account details. Right now, we have a margin of 4,685. If the market is crashing from 9,300 to 2,100 and we don't exit earlier, then the entire margin is going to be taken away from us. 4,685, the amount of money we paid to open up this trade. Because that's how much it's worth it. Because we actually opened up a trade of 9,361 worth. But we paid only 4,680, which is the half of that. Due to the fact that we have selected 2x leverage. If we would have gone 10x leverage, then we would have paid 10 times less than actually the order value. Our required margin would have been $900, right? $930, not 9,300. So with $930, you're going to get a liquidation price that is not that as far distance as it is with 2x. Because with 2x, the platform is not giving you that much money in margin. It is giving you less, just 2 times, compared to the 10 times value when the PrimeBit exchange is giving you 10 times on your money. So they take a lot of the risks. Therefore, they get the estimated liquidation price closer to the market price. That's how it works. The higher leverage you take, the closer the estimated liquidation price is going to be to the real price of the market at the time of entering and opening a trade. The less leverage you take, the less money you receive by the platform, but also the risks are a lot less. You go high leverage, you get tons of money from the platform. And you don't need to pay too much on that with your required margin. That's, little. 10 times less than the actual value. But attention, the liquidation is going to be on the same page. It's not going to be on the other page compared to the 2x. So you have to test the things out. And one of the things that I realized at PrimeBit, that you keep playing here with the liquidations and you try 2x, 10x, 25, 40x, and so on. And then sometimes with the demo, the liquidation price representation fails, but only with the demo. Right? So that's something I've been realizing. This is a bug they are working on. I already spoke to them. Today is 21st of May. I'm making this video. So they're working on this, and probably in 24 hours it's going to be done. You'll be able to see the estimated liquidation price correctly, especially even right now, always on the real accounts, you see it correctly. On the demo accounts, there is a bug, and sometimes you don't see estimated liquidation price correctly. But this is going to be fixed, right? So that's pretty much all about things you got to understand for the platform and the way it works on the required margin, liquidation price, fair price, entry price, everything that we have to talk about. Leverages, and this is a full understanding of the platform. Hopefully you got the idea of a fair price. If the market is crashing because a whale wants to manipulate it and they want your liquidation prices to be hit, and then everything is pumping back within the next seconds, but there was a crash of 10 seconds which could have liquidated you. No, it's not, because you have a fair price mechanism which is delaying the action. So you see the real price of the market is crashing, so you exit faster and you don't get liquidated. You're not going to get your entire position wiped out. That has been calculated as a required margin, and it's also shared with you margin. It says here, this is what you're going to get wiped out whenever you touch liquidation, your margin, when you have an open trade. When you don't have an open trade, you can still see what you're going to get wiped out at required margin. Simple, guys. That's pretty much all about today's video. Hope it is not too long, but we made it straight to the point. If you have questions related to business, make sure to put it in the comments area. But also, for those of you looking to become professional traders, check out scrambocoaching.com, my website, where I'm talking about my private coaching that is running one-on-one on Skype calls during 4 weeks of intensive hard work where I'm trying to transform you into a professional trader, guys. Watch this video right here on my website, scramblecoaching.com. See how it works, and you can apply for it. If you think you want to gain financial freedom, freedom of time, being able to schedule your own program, work, and type of lifestyle that you want to have, if you think these are values for you, if you think you deserve such things, then you must be a trader, because a trader has all these benefits. We've been doing trading since 2014, and obviously at the beginning it is not easy. Anything in life that is valuable is not going to be easy at the beginnings, but at the end, when you reach to make profits and find out, which is actually not the end, it is actually when you basically break the ice and you learn how all these things is working, then you obviously change your lifestyle. And there's more ways of doing trading. You can be working a couple of hours a day, you can be working every other day. There's more ways to do this. Even for the ones having other jobs, trading is still possible, guys. It's kind of definitely possible, I would say. That's pretty much all about today's video, guys. There's a free Skype call conversation for those looking to find out more details at register now button right here. You complete a form that's going to pick up. I'm going to reply to your email. If we all agree on the conditions, we go on a Skype call. I explain it to you. And we're good to go. Thank you so much for watching. Feel free to check the description area for all the links. And have a beautiful day.